Good afternoon, good morning, good evening, everyone. Welcome to the Climate Bonds webinar on our Treasurer survey. Please bear with us for a few more minutes while we're having more people join. We're at 80 participants now and counting very quickly upwards. So please give us 2-3 more minutes to have everyone join. Thank you. For those who've joined in the last few minutes, welcome everyone. This is the Climate Bonds webinar on the Treasurer survey. It's 3 o'clock CET exactly. Good morning, good afternoon, good evening. We're just waiting 1, 2, 3 more minutes to have everyone join. We're counting up very quickly. It's great we're having so much participation on what is a Friday afternoon for most or for many. So please bear with us for 2 more minutes or so. We'll be back. Thank you. Hello, everybody. It's 1 past the hour, and being a punctual German, I suggest we start. Welcome, everyone. We're in whatever time zone you are. Good morning, good afternoon, good evening. This is definitely not the first. It's yet another one in the series of so many webinars that Climate Bonds Initiative have been doing as of recently, adapting, as all of you, wherever you are in the world, to the current crisis and the new way of working that we all find ourselves confronted with. Today, we will talk about a treasurer survey. We will explore what treasurers all around the world who have already issued green bonds or who have not issued green bonds, who are thinking about it or who are not, what they are thinking about green bond markets. We have a great group of speakers with us today, and I will introduce them to you in a minute. But let me also mention that there's more to this today. We can put this survey in a bigger context. Notably, I should mention that Caroline Harrison, who will speak in a minute and guide you through the outcomes, and her colleagues, and Leah Muething will also speak today out of the Climate Bonds team. They have all worked on much more research than only this. Evidently, the flip side that you may expect for a treasurer survey would be an investor survey. And hey, yes, we've done that as well. We've talked to 86 treasurers and we've talked to about 48 European, though I will say, investors. But if you're interested in those outcomes, please go to our website and have a look. And as the issue of pricing evidently is important to both of those constituencies, yes, we've also done that piece of research. And there's a whole array of research reports out there. I've counted 8 reports spanning the whole period since early 2016. So if you're interested in the details there, go to our website and have a look. As I've alluded to, this webinar is one out of a big series. Many of you have earlier joined our webinars on the EU taxonomy, for example, which we run like a radio show every Thursday at 3 p.m. CET. And you're most welcome to join. If you've missed them, well, have a look. They are all recorded and you can watch them back. And I can only recommend that. You can really lean back in your armchair, listen to it like a great, great radio show. And it's very, very instructive. And there will be more forthcoming. Have a look and go to our website, www.climatebonds.net/webinars. As easy as that, climatebonds.net/webinars. You can watch back and you can register for the forthcoming ones. So much of a background. Evidently, we are climate bonds, so we will talk climate change. And let's, in the current crisis, not forget all of those things. While everyone is totally consumed, and probably understandably so, with COVID-19, and we hope that all of you, your family, your friends, your colleagues are all safe and healthy. While all of that is going on, we shouldn't forget about climate change, or the climate crisis, we should rather say. I mean, just 3 months back, we did have this lunacy of 20 degrees Celsius on the Antarctic Peninsula. That is not normal. That is yet another extreme. And just look outside, at least across Europe, we have blue skies and brilliant sun. And yes, we do all enjoy that. But it looks like we're up to yet another very, very dry summer. And at least in my place, we haven't had a drop of rain for the last 6 weeks. I don't remember, just 2 months ago, we were still in the midst of what was a very warm and yet another very wet winter. So climate crisis is here to stay, even amid the current COVID crisis, which we can consider as a general rehearsal for the many more crises that I'm afraid that will hit our planet as a consequence of global warming. More crises and deeper crises. So we've got to adapt to that. We've got to become more resilient, and that's, I think, what we're presently learning. We have now seen through this crisis, and we will reflect on that when discussing the survey outcomes, evidently, how the human species can adapt so quickly if it only has to. I mean, just think about how quickly we adapt our infrastructure, our health infrastructure in this case, how quickly we change our way of working and our daily behavior, but also deeper behavioral patterns are presently being questioned. And how things that have been undiscussable earlier, or unthinkable even earlier, like the massive and very powerful actions of governments and government-related entities, monetary and fiscal stimulus, how all that happened virtually overnight. So let's seize that opportunity as well and look at the stimulus to make it green and to further a green transition going forward. And at least from the corporate side of things, clearly the treasurers supporting the boards and the CFO will have a role to play there. So let's discuss that. And let's see what we can learn from these treasurer outcomes and these treasurer views in what will hopefully be a flurry of issuance in the near future, when indeed this green stimulus may lead to, well, not treasurers, but finance ministers and their agencies flushing the market with green sovereign bonds and treasurers flushing the market with green corporate bonds to support a green transition. So without much further ado, let me flag the survey to you. We're very proud to have been supported and funded here by the Luxembourg Stock Exchange and the Luxembourg Green Exchange, and also Danske Bank, both very long-time supporters and partners of the Climate Bond Initiative. And also the research per se has been contributed to by the Henley Business School. We will have a discussion. It will be conversational style, and we will also monitor Q&As that may come in. That's my role as your moderator today. But we will have Caroline Harrison and Leah Muething, both from the Market Research and Intelligence team at the Climate Bonds Initiative, kick us off with some highlights of the survey. We will first discuss treasurers' motivations for issuing green bonds, and we will later turn to the outcomes of issuing green bonds and discuss those things. We have with us today Lars, who many of you know as head of DCM Sustainable Bonds at Danske Bank, and also Carlo, Houblie, the commercial director at the Luxembourg Stock Exchange and Luxembourg Green Exchange. With that, thank you all for being here. Thanks for our panelists for contributing today, and I'm handing over to you, Caroline, to take us through the outcomes, and please do flag with us the surprise outcomes that you found.
Well, thanks, Manuel, and thanks everyone for joining this webinar. We're really, really thrilled to be sharing the results of this survey with you. It was about 6 to 9 months of work for us, but we feel that the outcome makes all that effort worth it. So, as Manuel mentioned, last year we published the results of the Green Bond Investor Survey. That report highlighted the lack of green bonds as the main obstacle to the growth of the green bond market. So when we undertook this treasurer survey, we had the intention of gathering some information on the challenges and the benefits of issuing green bonds from the perspective of corporate treasurers who had actually lived through the experience, with the hope of encouraging others to come to the market. When we started the project, we naturally expected the majority of the discussion to revolve around the pricing topic, since that is where a lot of the focus appears to have been. And of course, that's where a lot of my work is concentrated as well. So perhaps I had a slight bias there. But as we began the study, it quickly began to emerge that issuing a green bond could have a lasting and very transformative effect on an organisation in numerous ways, and that pricing, in fact, preferential pricing, ended up as really an ancillary benefit. So the scope of the survey was 86 treasurers from 34 countries of risk, and we tried to get representation for as many regions and countries as we could. So when we take you through the results, that is what we are talking about, the views, the collective voice, if you like, of those 86 treasurers. So we learned so many things from this survey. I'm just going to take you through just a handful of the highlights here. So we learned so many things. And for example, the process of issuing a green bond is triggered mostly by internal stakeholders. And recently, the board has begun to have an increasing influence on that decision. The key motivations for issuing green bonds were highlighted as market signal, reputational benefits, and the desire to help curb climate change. When asked why they hadn't previously issued green bonds, many treasurers, or the most frequently selected answer, was the market not being sufficiently evolved, and secondary to that was a lack of awareness among the investment community. We can see, the trajectory of that discussion has changed slightly in recent years as the market obviously has become more involved, and rising in prominence recently has been a lack of suitable projects. The costs of issuing a green bond are often described as a barrier to entry. So most respondents perceive the costs of borrowing to be similar to or lower than those of a vanilla bond. And they describe the costs either as negligible or valid for other benefits. So this is clear evidence that the costs of issuing a green bond should not prevent prospective issuers from entering the market, because overall that was not perceived to be an issue by those who had undertaken the exercise. So one thing that we do hear a lot about, or that I hear a lot about in the work that I do, is the fact that green bonds can help issuers to capture a new investor base. That said, I was still surprised when I looked at the results of the survey to see that 98% of treasurers agreed with that fact and identified multiple benefits as a result, including, but not limited to, enhanced visibility, increased stakeholder engagement, and a more stable secondary market. So, you know, when we talk about treasurers, an expanded investor base really is the holy grail for them. And it's good to see that they mostly agreed that green bonds can really offer that advantage to companies. 86% of the bonds coming from the treasurers that we spoke to were listed on a green bond segment of a stock exchange, and Carlo will be able to elaborate much more on this in a second. Treasurers highlighted visibility, perception and integrity as the main advantages of that. So that support and that platform is there for treasurers to use, and indeed they told us that they do. So Manuel, perhaps we could discuss some of these findings in more detail.
Yes, thank you, sure. And I think I should tell all of you who have now come online, by the way, we're almost 200 now, that the reason you're not seeing my face is not I have something to hide, but you know, I live in the countryside, and would you believe or not, there's still no broadband connection there. So if I share my video, the voice quality will probably drop dramatically. So really apologies for that. It's not nice to have a disembodied anonymous voice, but I think that's as good as we can get it now. Thanks for bearing with me. If you want to know more about any of the things that Caroline has just described, and thank you for that, Caroline, it's all in the report, as you won't be surprised to hear. The report is out there, and there's a lot of explanation around these graphs that you have just seen. What really struck me, Caroline, is this outcome that, well, it's two sides of the same coin, that apparently the cost was not considered a problem, although there's often talk around that in the market, and that one didn't necessarily go for more advantageous pricing. I mean, how does that resonate, Lars and Carlo, with your findings when you're talking to prospective issuers? And can you just tell us how that works in practice and what you hear? Lars, why don't you start?
Yes, of course. I mean, the pricing is still on the table, and it's a question, of course, but looking at the broader picture, I mean, it's about understanding that climate risk translates into financial risk, and as a treasurer, you need to withhold and attain and see that you had a broad investor base for different reasons. And the reputation question was highlighted here, and also the market signal that you actually mitigate or take care of these risks gives you a stronger credit profile, and that also that you show with your green bond platform, for example, that you also mitigate these risks. That is taken into a lot of consideration, and as the survey and also the treasury, the investor survey so last year that we also sponsored, shows from the investor side that engagement with the issue makes the investors more persistent and likely to participate. So of course, if you have a broad and engaged investor community and stakeholders, you might have the chance of bigger books resulting in a pricing differentiation. But is that the key reason for the issue to go with the green bond? No, the answer that we've seen here is mainly to have that engagement dialogue, to have that broad investor base to utilize.
If I may, I just want to nail that a little bit more, Lars. I mean, is it that the cost side and the potential pricing advantage is not important, or are you telling us that it's rather being crowded out by these more important considerations? What's the nuance here?
If we look at the results, the pricing question was still relatively high, but asking if that was primarily the reason for issuing green bonds, then that was the answer was rather other aspects here. But of course, it's a beautiful side consequence of the engagement with investors, that you also sometimes receive a better pricing situation. I think going from experience, having discussions with issuers and speaking to treasurers, I used to be in a treasurer myself. Of course, you don't want to pay up and have much more work related to these offerings than you have for others, but it's evident, and that's what we hear from all issuers being active in the market, that they actually get this better dialogue with the investor community, get a new story or the possibility to tell their broad environmental and sustainability story, which gives a long engagement and better engagement with the investor community. And that has become the key reason, and this is what they're trying to entertain, and of course with the investor community.
Well, and thank you. Thanks for adding this nuance. That really makes it more, makes it clearer, which means, Carlo, you now have a more difficult job to reflect on that. Please go ahead.
Yeah, let's say from what we see generally over the more than 700 issuances that we had the luck to have with us at the Luxembourg Green Exchange, it's difficult to observe whether or not there is a real pricing advantage. So it depends always on who actually the issuer is. Or that's something. I mean, again, probably the most important advantage here is really the investor engagement. Being able to touch and to tap into an investor base that has very specific requirements and that has a big advantage of being very stable in its holding approach, knowing that most of these securities are buy and hold securities. So that's I guess that's a bit the main advantages seen there.
And what's your view on the cost point that I tried to nail earlier, Carlo?
Costing point. I mean, that's rather than the question. Really the question for the treasurer. So.
Fair enough.
Hi, if I could just add something here, and Leah, perhaps you could jump in with this point. One of the questions that we asked as part of the survey was, do green bonds involve more engagement with investors? And at some point it became amusing for us to ask this question, because we already knew that the answer was going to be yes, because each time we asked the question, we just got more and more enthusiastic responses. Including things like, you know, when we issue a non-green bond, the conversation revolves only around the finances of the organisation. But when we issue a green bond, we have engagement with investors at all levels of the organisation. They're more interested in the business model, they're more interested in how we're planning to take the business forward, and so on and so on. So Leo, I don't know if you've got anything to add to that point, but it was something that we definitely found very striking when we were actually undertaking the survey itself.
Yes, Caroline, I agree. And I also just wanted to reiterate what you just said. We were very surprised to see that it was seen as one of the main benefits in terms of visibility and of course, visibility and engagement with investors. These are things that are very difficult to measure in terms of value. And it's a common issue in the whole green space and in the ESG space that there are so many things that are very difficult to actually capture, and you have so many things that are intangible. But it's a really great outcome to see that these treasurers, even though they don't know exactly what the value is, they can't put a price tag on this, but they still appreciate this, and it is a reason enough to actually come out with a green bond and issue a green bond. So I think this is a really good outcome, and it's a really good message as well.
Yes.
Now that you're adding nuance, Leah, and thank you for that, I'm afraid I have to ask you for even more there, because we're getting a few questions from the audience which point at the same thing, which is people want to understand in how far we were able to see a difference between perception and visibility. And I read this question as visibility by issuing green to your investors versus you being perceived as credibly green, which is related but evidently not the same. Is there anything you can say about that coming out of the discussions you've had with those many treasurers, Leah and Caroline?
I think it would be difficult to distinguish between the two, because of course what you get is more visibility, but how the audience perceives you is a different story. And that also varies from business to business, I would say, because we spoke to a lot of different organizations, and the level of greenness and the level of sustainability within these business are very different. So if you have, let's say, a company that does recycling as a business, then of course it probably wouldn't change much about the overall perception of a business. But if you have a utilities company that is just starting their transition towards green, of course that can actually change people's perceptions. So I think on a general level, it is difficult to distinguish between the two. But then, yeah, it really depends on the actual business that you're speaking about and that you're speaking to.
To add to this as well, I'd just like to say that we found that the board was having increasing importance in the decision to issue a green bond, which we feel suggests that high levels of organisational importance, if you like, are becoming increasingly aware that it is crucial to position themselves as an organisation that is preparing itself for the impacts and the effects of climate change. And now more than ever, those who are doing so are starting to see real benefits, you know. So Carlo, maybe you could actually elaborate more on this, because
yes, I mean, this is an interesting point, because it shows that, so the board involvement actually shows that the broader topic of ESG, so besides climate, is becoming, of course, more and more a very important topic for also the board level. Why? Because not addressing, not identifying the issues that you may have in your business model with regards to ESG challenges doesn't really make your business model stronger, more sound, or more resilient. So that's the first point. But also there is a reputational risk, of course, an increasing reputational risk that you have if you do not properly address the risks that you may have in your organization. Since, as also mentioned in the report, going into a green project inside an entity may be a very transformative process. So it's clear that it will also go up to the board level. And last but not least, actually there is more and more significant peer and stakeholder pressure as well on corporates to address the broader ESG topics. And I guess all these together, as was also part of the findings, all these together explains then also the very high level involvement.
And Evelyn, one can be seen as working on those things perfectly, but just sitting on your bespoke green exchange, isn't it, Carlo? But having heard all of this, I just wonder how that will play out in the nearer term or medium term future, given the current crisis we're in. I mean, if I may summarize, what I've heard is that you know, by issuing a green bond, one signals that one manages climate risk and other environment-related risks, maybe either that may have an impact in an ideal world on your credit profile. At least it will look credible and enhance your reputation and reflect on you positively when engaging with investors, and they may like you more and stick around. And the board is driving that. But all of those things, I just wonder, are they not under pressure when we're in this current crisis? Does the board still have time? Do investors still have time to engage? And is there indeed still a reputation gain to be had if the corona crisis consumes everyone's attention? And that seems to be the thing one has to manage. How does that look to you, Lars, these days when you are exploring the Nordic market or you know, anywhere you're traveling virtually these days?
Yeah, traveling virtually. Yeah. No, that is true. I mean, a lot of things has been on pause, and it's rather that we've seen a tremendous issuance of pandemic-related bonds. Some already had a social and sustainability framework in place that could utilize and tailor to the pandemic and alleviate or benefit that. So definitely some $35 billion we've seen in that type of issuance, and that's taking its place, of course. Nevertheless, we've seen a little bit of a step back in bond issuance as such during March, of course, and but now when we come from these uncertainties to a market that is to some extent back with repricing, we do see that green bonds tend to have a great the outcome of the green bonds reflects this investor interest, and we see in large order books and very good pricing for the green bond issues that had revisit the market. Have we seen new green bond issues to the market in these turmoils? No, not really. It's been existing ones using the already existing platforms and the engaged investors they already have. Will they have time if you came with a new one during March, beginning of April? Would you have had time to get investor interest? No, I think a lot of people was preoccupied with other things these days. So maybe that had been a bit of a challenge, but going forward and from now, I think we will see some of the projects that have been paused during these times, and also some nice issues from already existing.
Exactly, and And I think that's what we confirm. I mean, fair enough that, you know, when you're not a repeat issuer yet, that you're not going through something new in a crisis, but indeed repeat issuers coming back is a good signal. So the interest is still there. The theme is still high on the agenda. We hear that from everyone. And we can even witness in the April issuance volumes, isn't it? They're almost back at the levels of January and February. So that's pretty good and reassuring. And thanks for being so optimistic. We'll go to the outcomes that you've mentioned in a second, but just the same question to Carlo. What's your views on, and how far will green stay on the agenda?
Oh, of course. For the time being, we are in a sanitary crisis, in a pandemics crisis, but this will, sooner or later, this is something that is going to settle. Now, what will remain and what will have the longer effect is the resulting economical crisis. So again, if I'm in charge of a company, then that's what we have to think now. So what will happen? How are we going to do to deal with the economical issues? And obviously, there are many discussions around this now. Getting out of this crisis will necessarily be the recovery from this crisis will necessarily be to be green. It will have to be aligned with the with climate objectives, and so it's not something you can ignore for now. So you have to plan for the future, and that's the green theme will be extremely important to get out of this crisis.
That's an excellent note to conclude on, or to conclude. But I just wonder, you know, how will the green on the social and the corona or the COVID bonds and all those kinds, how will those coexist in the future? Will they be cannibalizing, or will they be complementary to one another rather?
They are totally complementary. Now, what we see for the time being, we are probably living through the finest hour of the social bond frameworks. First of all, you have to see that we have to be grateful, and it is great to see how flexible and how efficient these the social bond standards could have adapted to the corona crisis. Enabling to raise funds for extremely important topics like healthcare infrastructure, healthcare infrastructure in general, but also how to maintain, for example, by providing bridge loans for maintaining workforce in jobs, thus securing the subsistence of the most vulnerable. You know this. So. But going forward further, we will have, of course, to get out of the crisis, the economical crisis, we will have to invest in clean energy. We will have to invest in energy storage, which will be a big point, while always assuring that this transition will be a just transition. And there again comes in the social aspect of things. So I'm sure, I'm absolutely convinced that we will have a coexistence and an equal need for both of the financing instruments. And that's valid as well for green and for social, obviously.
And
Lars,
I definitely see, I definitely see, I mean, this coexistence as Carlo is mentioning here, it's if we look at historical numbers, the green bond is some 85%, sustainability bonds some 10%, and social bonds some 5% of the sustainable bond market. And looking at these days, I would say the sustainable bond issuance is quite at par with last year, even though we've seen this March and beginning of April. Green bonds was up some maybe 25% in the mid-Feb. We're maybe back some 10% as of today. With that said, during these times, even though some of the pandemic-related issuance, like the response bonds and so forth, we've seen have not been labeled social or sustainability, the labeled sustainable bond market is still, all in all, intact in comparison to last year, where we see social bond issuance in April almost being 30%. So it's extremely interesting to see how swiftly issues move, and many of these issues have already existing green or social bond frameworks now adopting a response bond framework or similar. making this possible and continues to engage with these investors where needed most. And I also like to make a small comment in the coexisting. I shouldn't take it too far, but we have seen for social bond or social activities financed with the bond market, it's been a little bit tough for some investors from different parts of the world to engage in the social aspects that you might have in a given jurisdiction. So we might not have seen as diversified books geographically when it comes to social bonds historically. With this corona-related or pandemic-related bonds, we have seen that. We have seen the global diversification of investor community, because the pandemic is a global feature. So is CO2, where we come to the green bonds. So I think that's that of course has helped in that sense, and these tools have been very efficient, helping even local matters in relation to creating job activities, health, and so forth in local jurisdictions.
Cool. Thank you both for being so upbeat. That's really cool. I mean, I want to turn from the motivations to the outcomes, but before I do, let me conclude. I mean, I take it also in light of my introduction, climate is here to stay. It's very reassuring to hear from you that you're saying that that's indeed the case. That's going to happen. We have to fix. We make for a green recovery, as Carlo put it. Indeed. Very reassuring to hear climate and green focus here to stay. You're also saying the themed bonds, labeled or not, but can support that, and that the social focus that we now have and the green focus that we have to maintain, and as you say, will maintain medium to longer term, that those things can coexist and be perfectly complementary. So that's very good news. Caroline, I want to turn back to you and ask you to take us through the outcomes of issuing green bonds, but just before you do, also answer one question that we had from the audience, where there was a question, hey, for all that you're presenting here, is there not something like an equations bias? So are we not talking to treasurers who are by default positive about issuing green bonds and not contrarian? I know you've talked to many contrarian ones as well. Can you elaborate on that and then take us to the outcomes quickly, please?
Well, we talked to 86 treasurers and we did get a decent range of opinion, but what we were looking for here was critical mass. So, you know, the numbers speak for themselves, and I don't know, Leah, if you've got anything to add to that. But honestly, the response that we had was overwhelmingly positive and appears to be so. One thing that I can also add to the pricing discussion is that while by issuing a green bond, you may not get preferential pricing, and I know that because I look at this all the time. One thing that you will not get is worse pricing. So in terms of treasurers having a negative perspective on this, I really haven't encountered anybody being really regretting issuing a green bond, let's say. So Leah, I don't know if you have anything to add to that.
No, I would just reiterate what you just said. Of course, we've been speaking to quite a few treasurers, and you could argue that, of course, who these that are actually willing to speak to us are probably very enthusiastic about this topic. But if you look at the sample, you can see that we've talked to a very wide range of organizations, and they've issued from one bond to multiple, like frequent issuers. So I do think that we captured quite a good range of different organizations, and yes, I would say that you shouldn't argue that they're by default giving positive sentiment, of course, because they enjoy it, but I think it just speaks for the market itself.
That's great to hear. And I should stress, this was a global study, evidently. Yes, you talked to more Europeans than elsewhere, but it was very much of a global study. Different from our investor survey, which focused on European investors only. But mind, there's no explicit regional exclusivity here. Caroline, please take us through the outcomes of issuing green bonds very fast. Make it 3 minutes.
Okay, I'll do my best. So just to talk about some of the other benefits of issuing green bonds, when asked, 70% of treasurers said demand for their green bond was higher than for vanilla equivalents. Another 20% said it was the same. If you look further into this, issuing green bonds does appear to have been a positive experience, because 88% of the respondents that we spoke to said that they would issue more green bonds, and noting obviously that it's going to be easier the second time round because all the frameworks and things are in place. So on the topic of issuing more green bonds, the frequency of planned repeat issuance varied greatly according to the size of the issuer, but most said that they plan to issue green bonds at least once a year going forward. The question of moving the market forwards naturally encompassed a discussion on standardisation, and this is very topical at the moment. And as Manuel said at the beginning, Sean is doing a weekly webinar on the new EU taxonomy and so on. So most who we spoke to said that they preferred standardisation of definitions, taxonomies and reporting to maintain the integrity of the green bond label. So, sources of support for issuing green bonds. We asked issuers who had helped them in the process of actually issuing the green bond. So this is pre-issuance. And those that were chosen most frequently were the DCM desks and the SPO providers. So there's plenty of sources of support out there for those wishing to dip their toe in the water. Finally, overall, the time that it takes to issue a green bond has decreased over time. And this is very encouraging and is as one would expect. And it demonstrates the importance of precedent. Consistent with this, we also noted that larger issuers tended to have been in the market for a longer time than smaller issuers. So these are just some of the findings, but of course, things like internal engagement I haven't touched upon, but that was also another huge benefit that was highlighted repeatedly from green bond issuance. And overall, we had this one question at the end of the survey, which was, what would you advise other treasurers who were thinking of issuing green bonds? And you know, absolutely everyone said the same thing. It was either do it, just do it, get on with it, don't hesitate, don't mess about, what are you waiting for? It was overwhelmingly positive. So again, Manuel, perhaps you could take that back to the discussion and see what the others are thinking.
Yeah, I mean, it sounds like Lars will have a very, very easy job going forward. I mean, 88% saying they're going to issue more green bonds. And then there was these other big graphs saying that many more will issue more often as well. And then they're just telling their peers, just do it. It sounds so simple, Lars. You must be flooded with bonds just coming at you. You could just sit on in your armchair there, can't you?
Yeah, I wish. But still, as also discussed previously here, I mean, it's discussing or talking with those already issued green bonds, having experienced that internal discussions, stakeholder discussions from board to your second opinion provider in the process, us at the bank, and then the long-term commitment and engagement with your investors. I mean, of course, they're quite keen to continue, and the challenge there is rather finding green assets and continue the work they are doing to increase the possibilities they have to finance themselves via the green bond market. And so the discussion is rather on those topics and discussing the development. And in EU, we have the EU taxonomy coming up and so forth, to just mitigate and continue to develop your platform. So yeah, that is true. For those that haven't yet experienced this, and we are trying to put words on that and during long times, and there's numerous panels and discussions, of course, on these topics, and we meet and discuss with clients all the time. But a survey like this and the survey that we had with the investor base, just concluding, do it. It's a good experience, and of course, it's something. It's the reason, and this why we chosen to sponsor these two reports. Of course, is because we wanted to see, and we knew that this would, to some extent, be the outcome of such a service, and it highlights and puts forward the possibilities of getting new issues out there in the market, and for those that are already active, continue to invest and fund projects of this sort.
So maybe it's not that perfectly easy, but pretty easy it must be. I mean, what I hear is you got to do it first time around. It may be a little bit tougher, but you have to actually do it and jump through the hoop, so to say. The first time is a little bit more difficult, and then it gets easier, and your peers are doing it. I mean, it's just like you just have to get there for the first time. I mean, what does it need to make people jump through that little hoop, Carlo?
I just want to add one element. So the higher demand and the regular oversubscription rates we see in green issuances might, and just to give that point, maybe might also be still an indicator for a lack of supply. On the other hand, I may corroborate this argument by giving the one other finding was, for example, that half of the bonds, the issued green bonds, have been allocated to green investors. So you see, there is a community that still suffers a lack of supply. Now, another interesting aspect in that is that 50%, the remaining 50%, have been acquired by non-green investor or by classical investors. And that's another very important, very interesting point, because going back in time, if we go a couple of years back, then green securities typically were absorbed by green vehicles or green investors. Now, showing that 50% now are absorbed by other market participants is interesting, because it shows that we are slowly but surely getting out of that niche existence of green products, and that due to portfolio diversification of classical actors, it becomes also an investment that is to be considered. But again, this will reinforce actually the lack of supply. Bringing that back to our argument of recovery, that is pretty encouraging, because as we've seen, there is room for more issuances.
And any clues, Lars, where this room for more issuance is? Because we're also having a question come in where people ask, you know, can it be browner companies, if you so will, not yet green companies, that use green bonds to issue in green, to invest in green projects and then green their ways, so to say? So if it were those companies that we would get to issue, then that would evidently help satisfy the lack of supply that Carlo has flagged. Where are those pockets, Lars, and what do you do to access them?
Let's say, from my perspective, because that leads also to a certain point to the standards. If you do not have one of the objects, or one of the pain points that certain issuers may have today when issuing, when trying to go into the green issuance, is metrics, certainty, standards, taxonomies, etc. So to have a really standardized environment. The more standardized the product is, the easier it is actually to be set up, to be built, and to be issued. Now, one of the expectations we have, of course, is that having, for example, the EU taxonomy in place, which provides then also with metrics for, in brackets, brown sectors, that this will allow also to engage in that transition, and to also have the transition of brown to green, less brown. That's another discussion, to have this financed. And by the way, we see at the association level, we see as well, of course, ongoing discussion, for example, about transition finance, how to make it easier, how to integrate the idea of transition finance into the green portfolios. So I'm pretty optimistic that there is substantial room for issuing additional products on that side.
Yeah, and let me mention, I mean, clearly the EU taxonomy has also provided clarity around this transition question and providing definitions, and the Climate Bonds Initiative, rest assured, and watch the space, will also issue some guidance there in the not so far future, let's say before the summer. So watch the space. But Lars, again, where are those pockets? What sectors are we talking about that may be ready to satisfy that lack of supply and that may be ready to just do it?
Two of my preferred examples that are linked actually back to the transition topic. First of all, we have the world shipping fleet. So shipping is definitely a point, because we are not going to be entirely green with ships from today to tomorrow, so to say. That will take time. We need to have transitional concepts in shipping. And shipping represents approximately 6 to 8% of the world carbon footprint. Knowing that also with, for example, the deployment of the IMO 2020 regulation in the shipping area, there is a huge need for financing that transition, because you need to adapt your vessels. That's one example.
And the other sector, Carlo, before we hear from Lars? What's the other sector? You mentioned two.
The second one would be another very important thing is cement, for example, producing cement. It's, I guess, another roughly 6% of the world carbon footprint. Effectively, for example, the EU taxonomy provides with effective metrics on what could be considered as being sustainable as a carbon output in the cement sector. Now, this needs actually to rethink the production process, to rethink your production lines, etc. And again, there is something. You are not going to be entirely green from today to tomorrow, and in the case of cement, probably never ever, because there are the laws of chemistry. But again, you can come to significant improvements. And there again, you need to have, there is an enormous financing need, because cement, again, is something which as an industry typically is also pretty decentralized. So you have...
Sure. If I may, just before we hear from Lars, I'm keen to hear what Lars senses in the market. But just to mention, on seaborne shipping, indeed, that's something that's not covered in the taxonomy. But watch the space again. The Climate Bonds Initiative will very shortly issue criteria under its climate bond standards and certification scheme, and issue a public consultation as well. And for cement, that's under the EU taxonomy, and it has been discussed in the relevant webinar that my CEO Sean Kidney ran with a couple of his tech colleagues on industry. So if you're interested, watch that webinar back. But Lars, I was keen to hear from you as well.
Yeah, and I can echo what Carlo just said. I mean, as you mentioned, the shipping criteria is soon out. I think that will be tremendous possibilities. We also, if we look at the investor survey that we saw from last year, it was also renewable energy. There's still tremendous possibilities within that area. Already existing facilities that have been built. Not all of those are truly financed with green bonds. Transportation in a greater sense, also very much taken into consideration by Climate Bond Initiative standards and the EU taxonomy, so that we have clear definitions of what could be considered, and far from everything is financed with green bonds, even though it of course will never be everything financed. But and also, if we look at land use, which is it's not that frequently used in the green bond space yet, but we have forest-related investments and coming to agriculture. There's tremendous possibilities in those areas, if to name a few. And real estate is always real estate. We have financial institutions with mortgages, defining green mortgages now in the EU tax and similar, and the CBI has as well. And also for commercial properties and property owners, there's all the possibilities in the world to issue green bonds financing those that meet the targets that has been given. So there's tremendous possibilities. If we look at some of the markets, I mean, I think it's stated here somewhere that half to a percentage of all bonds in the world are green. So there's quite a good possibility there. Looking at Europe, some 9% the corporate space was green last year. In Sweden, it was 28%. So of course, if we would use the Swedish model to add on to the European, there would be substantial beneficials there as well. So there's so much that could be financed with green.
Yeah, thanks for being so upbeat again. And just on steel, I mean, we saw great issuance from SASB on low carbon steel, wasn't it? And what they're doing there. On land use, by the way, I should flag, we had a webinar yesterday my CEO discussing with our head of the standards team on land use criteria. So watch that webinar back if you're interested. Just conscious of time, we got a few more minutes, and I want to let people, well, either start their Fridays or end their Fridays on time. Evelyn, we can flip this around as well. I mean, when there's lack of issuance, it may be related, you know, not only to you need to get ready to go through the exercise and structure agreement on those kinds of things. You know, as you've both shown, there are also more opportunities in other sectors. But the question is, does the corporate, for example, who wants to issue, does the corporate have access to green projects and assets? Now, what really struck me as the one big surprise outcome to me out of this Treasury survey, the really most important thing to me, was that treasurers seem to have reported that they are being offered more participation in more green projects after having issued a green bond. So the green bond serves as a flag to those project developers to go to the corporates and say, hey, shouldn't we cooperate on this? Is that something you see in the market as well, Lars?
Yeah, I mean, that goes also for investors. I mean, that's also one of the reasons for this engagement between the green bond issuing entity and the investors, because it's highlighted that you are considering these features. And during the process of, as we as an experienced advisor and structuring advisor also for setting up the green bond framework, in that process we go through the ESG parameters, the climate resilience, and also then you come to a third party verifier having the same questions. So you're quite prepared as an issue coming to the market, meeting these hungry and interested investors and being able to answer those questions. That's a door opener for those discussions. It's not that you, from one day when not being in green bond issue to the day being a green bond issue, that you have changed your entire business model because of this. It's rather tagging on to what you already are doing. So it's just a door opener to those discussions, as mentioned, that other stakeholders in the market will ask those issues for possibility of financing as well.
Yeah, or door opener, or maybe it's just, you know, getting your house in order, and getting ready to roll out green projects even faster and show to people that you are good at doing that. Maybe. Yes. And that would then support you having more green projects, and those you can finance with more green bonds, so we will all see more issuance. Let's hope for that indeed. Conscious of time, I want to conclude, and I want to ask all of our panelists for just very brief parting thoughts. What, out of this discussion, out of this survey, out of your discussions with treasurers globally and the opportunities and challenges you see, what is the thought you want to give away to our audience, which has been so loyal and staying with us for the entire hour? Ladies first, Leah.
Yeah, I actually have one thing. Yes, short and sweet. So we've seen that obviously green bonds have quite an impact, can have an impact on organizations themselves. And what green bonds have been criticized before for is the additionality argument. So we can actually see from the survey that green bonds do more than just issue green bonds and then rather than just going back to normal business. We can see that they can have an impact on visibility. They can have an impact on collaboration and internal processes and much more. So I think this is something that we should really acknowledge. We can also see in the findings that they have come green business lines out of green bond projects. So I think this is something that we should acknowledge. And I think this is a really good outcome.
So green bonds giving you lots and lots of benefits. Again, just do it. Caroline.
Yeah, so touching on the earlier discussion about COVID-19, emissions have dropped quite dramatically this year, as you've seen, and I think it's important now to do everything possible to ensure that those lower levels of emissions are maintained by using their economic recovery to implement structural changes. And, you know, why can't this be financed by green bonds? We've already heard from some of the treasurers who participated in the survey that one thing that was preventing them from issuing even more green was a lack of suitable projects. So let's keep those projects coming as we move forward with the economic recovery. The final thing that I would add is, if you are thinking of issuing a green bond, if you know anyone who's thinking of issuing a green bond, or if you think you might possibly know someone who may be in the future potentially thinking about issuing a green bond, give them this report to read. It's extremely informative, and it will dispel a lot of the myths that are surrounding the process, as well as introducing a lot of positive sentiment.
So read a report, myth bashing, and make the recovery green and finance it with green bonds. Carlo, short and sweet.
Short, that's always difficult. We are facing altogether. We are facing one of the biggest challenges that we ever had after World War II. What is, on the positive note, what is interesting to see is that we have the tools, that we have the means to get out of it, and I guess that. All the social and green frameworks give us solid tools to open to solution and to raise the necessary funds for that, both on the public and on the private side.
Okay, so we've got the tools. Again, use them, just do it. Lars, the last word.
Very good comments from my colleagues here. So we could finalize with the just do it then, but I definitely see that how you perceive definition of an entity, it's quite obvious that both from the investor survey and the treasury survey here, we see that these tools enhance your possibilities and to that engaged investor dialogue, which is key to a treasurer, to an entity, to have that broad investor base, to have that diversified funding possibilities during those times that we are in now, crisis, economic, for other reasons, entering into difficult times with environmental challenges. You need to be able to address those questions and tell them to your investor community that your credit and the work you do is continuing, and you're mitigating, and you cover resilience questions. And green bonds is a fantastic tool to do that. And these two services truly underlines that stakeholder engagement and dialogue.
Okay, so it's not just do it because you've got the tools and because it's not rocket science, but also do it because you may be in trouble otherwise. And either way, I think we've seen today there's many benefits from issuing green bonds. There's many tools out there. Others have done it before. Others tell you just do it. It's not that difficult after all. Maybe the first time, but there's scale economies in knowledge and costs later on. Costs are not the problem. There's many benefits around that. Just go out and do it. There's a lot of support around you. Come to us, talk to us, come to Lars, come to Carlo, read our reports. There's so much to be done. In other words, there's little excuse not to issue green bonds and not to help us to make the recovery that we're hopefully going to very fast, to make it a green recovery indeed. That said, I want to thank you all for attending. We've had a very loyal group of listeners today, almost 200 that stayed on for the entire hours, very active with lots of questions. Bear with me if we haven't answered all of them, but we've answered many. So thank you all for dialing in. Thanks for our speakers, evidently, for today, Carlo and Lars, and our representing our sponsors from Luxembourg Green Exchange and Danske Bank. But also thanks to our researchers, Caroline, Leah, and their team for producing yet another great report. They're all great, they all look great, and they all read great. So read them all. And thanks for the people you haven't heard of or you haven't seen, which are our great comms team supporting us here behind the scenes, Mario and Luisa out of Latin America, and managing the technicalities and logistics function very well. So thanks for that. Before you all go, as I've said at the beginning, there's more webinars forthcoming and past, so register or listen back. Disseminate to your colleagues, to your clients, and elsewhere, so we spread the knowledge, and there's no more excuses not to go green indeed. Tell everyone about it. That's it, essentially. Just do it. Have a great weekend. Thank you all.
Thank you.
Thank you.